lots of free stuff teaching you about algorithmic trading, of course, machine learning. We've interviewed a lot of good investment professionals, CEOs of large investment firms, things like that. So lots of really good content on there, lots of crypto stuff as well lately. We just released a bunch of things. So let me share my screen with you guys here, and I'll show you what I mean by that. All right, so here we'll go to YouTube, right? And I'll show you, this is also, by the way, if you guys want to see the recording of this class afterwards, it's right here. So notice I search for Lumi Wealth, the name of this company, or company, Lumi Wealth. Click on Lumi Wealth to see our channel. And then here you see that we actually have this session right now is actually live right now on YouTube, right? So after this is done, after we're done this whole conversation here, then this is where you guys can find the recording of this entire class or lecture, whatever you want to call it, right? So basically it's right here. And then also when you're on our channel, make sure that you like and subscribe, all that kind of stuff. Hit that subscribe button. Basically because we're sending out lots of free content, lots of new stuff. I think you guys will really enjoy the things that we put out, especially around all the different types of investments and things like that. Around our new classes that are coming out. We're coming out the crypto class soon, so we're doing a lot of crypto content. So if you're interested in any of that kind of stuff, make sure you subscribe and then hit that this little alarm bell button as well, because that thing is going to give you notifications when new things come in as well. All right, cool. So, so that's a little bit of housekeeping there. So our YouTube channel, right? And I'll let Greg take it away. Greg is, of course, the instructor for this class, the machine learning course. He'll tell you all about himself. He is a fantastic person to learn machine learning from. You know, what schools did you go to again, Greg?
I went to Caltech and Berkeley and then Stanford.
Caltech, Berkeley, and now you're at Stanford. You know, just, you know, so-so kind of schools, right? Whatever.
You are right. Yeah.
Yeah, so as I was saying, Greg really knows his stuff, of course. So great person to learn from, and I'll hand it over to him and let him take it away.
Thank you, Robert. So let me share my screen so you guys could see my slides. Let's see here. And I want to keep this interactive. So as folks have, hopefully you guys can see my screen. As you guys have questions, comments, you know, feel free to add it. Either chat it with me. There's also a Q&A section on Zoom. So just trying to make sure I have all of the boxes open just in case. So let me open up the chat and the question Q&A. And let's see. Okay, good. So want to keep this webinar interactive. So I think hopefully everyone can see my title slide. If not, say something and I'll fix it. This is the agenda for this. So this is going to be roughly an hour, but you know, it could go a little bit longer if there's Q&A. So first, just kind of want to see who's on the call. So we'll just quickly do a round of that so that I could kind of know and tailor this according to who's on the Zoom right now. I'll go over the introduction in more depth. We'll go over.
Sorry, Greg, I just wanted to jump in here. Are you trying to show off your slides? Because I'm not seeing slides.
Oh, yes, I am. Thank you, Robert. Okay, let me try this again. I might have flubbed up on this.
I know you have a lot of computer screens, right? So
I have 12. So, yeah, so thank you. Okay. Robert, do you see my screen now?
Yeah, now it's perfect.
Okay, great. I'm so glad you said something. So thank you for that.
Yeah, no problem.
Okay, yeah. So hopefully you guys see the agenda slide now. If not, say something like Robert. Yeah, so I'll go over what is our machine learning based forecasting course. What are some of the trading returns? Talk about some of the tools I'll be using. I'll be going over some of the code. I'm actually going to go over a couple demos. So I'll show a little bit about that, talk more in depth about the course, and then kind of answer any questions. But want to try to keep this interactive. So anyone on the Zoom now that has questions, feel free to kind of jump in as I go through. Okay, so let me go to the next slide here. Just so I get a better idea of who's on the call. So if you could in chat, just say what your occupation is. If you know how to program, type P. Otherwise, just type N. And then how much investment experience you have. So I'll give a quick example for myself. So I do several different things. I'm a founder, CEO, machine learning expert. Okay, and I know how to program, and I've been investing since, I don't know, for 20 plus years, maybe 25 years now. So I'm going to give a quick example of what to do. So if you guys can all just type something, just to have a better context of who you guys are, that would be great. Okay, so let me go to the next slide. So let me talk about a little bit who I am. So as Robert mentioned, I went to Caltech for a degree in electrical engineering, computer science, then went off to Berkeley, and then Stanford as well. And I've done 4 different startups, including my own. My most recent startup, we got funded by Google Ventures and Andreessen Horowitz. We raised over $10 million. The company kind of pivoted a bit, and we're focused on algorithmic trading. So my company is called Pico Group. You guys could check that out. And I have, over 10 years of machine learning expertise. Yeah, thank you guys for let me know a little bit about yourselves. So that's awesome. Thank you. So what is LumenWealth? So LumenWealth, I think, is an amazing platform because it's, of course, the courses, but it's also like an amazing Discord channel. There's a bunch of, if you guys aren't on the Discord channel, you should definitely go check it out. So there's a really active conversation there where people are having discussions about what is latest crypto strategy, algorithmic trading, really great conversations and people community that's there. There's a lot of content, as Robert mentioned, on YouTube, and highly suggest you guys subscribe to get more because he's always putting new content out. And I didn't realize he had a crypto one, so that's actually kind of cool. That's really hot stuff right now. One thing that we're going to do at the end is we're going to send a survey out at the end of this webinar just to make sure that we kind of got all the bases covered, and really would appreciate that feedback. So when you get that survey, try to fill it out. And then let's see here. Let me talk about what we're trying to do here. So the core of trading is forecasting. So if you think about when you buy or sell a security, whether you go long or short, what you're trying to do is you're trying to predict what the price is going to be. That's the core of what you're trying to do. You're forecasting what's going to happen. And a lot of traders use traditional indicators like RSI or simple moving average or EMA. There's a bunch of traditional indicators that people use, and an example of one is like RSI, which I show right here. So this is an RSI inside of TradingView. So you can kind of see the RSI indicator, and if you kind of squint your eyes, and you can kind of see that when it breaks a certain point, it looks like that there's going to be kind of a run in the security. In this case, it's the TSG or the stars group. And so this has been a very traditional way that people use these indicators to figure out when they should buy and when they should sell. So it's you can kind of see that RSI was generally kind of at this upper limit or this upper line here, and when it dropped, you can see it kind of went flat. So it's not a bad indicator, and this is why they're used. These technical analysis is used to figure out when you want to buy and sell stocks or any securities, whether it's crypto or foreign exchange or whatever. Okay, so let me move on. Now, the problem with traditional indicators is that, and there's a really great article out there from Seeking Alpha. If you haven't been to this website called Seeking Alpha, there's a lot of really good information on trading, on strategies, on ideas of how to try to make more money in the market. And one of the articles in there it's talking about how algo trading dominates 8% of the stock market. So that's something which a lot of people don't realize, is that most of the volume on the stock market these days is actually not humans trading, right? Certainly Robinhood has brought a lot of people to the market, but there's a lot of these bots on a stock exchange right now that are automatically trading stocks. And the result of this, and this is the problem with traditional indicators, is that essentially all the really profitable, simple trading strategies that are based on this kind of technical analysis, like RSI, like I showed you before, have largely been eliminated. In that it's hard to make money from it right now. You can make some money, but it's hard to make a lot of money these days. And this happened starting decades ago, as all these kind of computers went online. And the basic reason why it's hard is, first of all, it's hard to get an edge because so many people are doing this, and there's so many bots in the market that are doing this, and they're doing a lot faster than any human could do it. And the second issue is that these technical indicators are too simple, right? They don't have the capacity to capture complex forecasting patterns. So essentially, it's hard to get an edge out of these simple technical analysis type of indicators that people have traditionally used over the past 30, 40 years. So this is a problem with traditional trading indicators. They don't have that much more predictive power, and a lot of people are using them. So it's a lot of the power that they used to have 30 years ago, 40 years ago, has kind of gone away. Now, what is machine learning? So what machine learning is, in contrast, is to traditional indicators, is traditional indicators were largely created at a time when people just maybe at best had a pocket calculator, or worse, didn't even have a calculator. And so they're fairly easy to calculate and understand. That's the great thing about traditional indicators. But the big problem with it is that they have very limited ability to factor in different information. So the way you get an edge in the market is you have to be able to incorporate other information. If you look at some of the biggest and most successful hedge funds, like if you look at like there's a television show out there called Billions, right? And the hedge fund manager there, he's basically trading on all this super proprietary information, right? So you don't have to go that far, but you still have to go further than just using the historical close price of the stock. But a lot of the technical analysis that people do today is just simply based on the historical close price of that security, which is, there's simply not enough information in there. And the frank problem with traditional indicators, they're just way too popular. Pretty much every single trading platform has them already right now. All the bots are using them, and they trade them a lot faster than any human can. And so it's really hard to make money. Machine learning, on the other hand, is more recent. It's not used as often in algorithmic trading. They're computationally much more complex and much harder to implement. But the real big power of it is that it allows you to factor in different information. So, for instance, maybe you want to factor in certain tweets or certain messages on Wall Street Bets on Reddit, right? Or you want to factor in the price of other securities. It allows you to incorporate a lot more information. And the way you should think about machine learning, the reason why machine learning becomes really important is, a lot of the really easy, profitable strategies are gone because too many people are doing them. So all the profits are kind of whittled away. What machine learning allows you to do is allows you to harvest. And an analogy I like to use is, imagine, back in the old days, like let's say 30, 40 years ago, there used to be like $100 bills laying on the ground using technical indicators. These days, finding those $100 bills using something like RSI is pretty improbable. You could do it, but it's pretty improbable. But what machine learning allows you to do is find more of those $100 bills, but more importantly, allows you to scoop up a lot of the somewhat small trades, but you could do them automatically, right? So rather than having you to spend your own personal time to get, pick up a few pennies off the ground, you could use machine learning to pick a lot of pennies off the ground in mass, right? So that's kind of like the big power of machine learning, is that it allows you to use strategies that perhaps are only possible with a human, but we're not that profitable to justify you spending a lot of time on it, because you're not going to make a lot of money per trade. But machine learning allows you to actually automate a lot of this, so you can actually make a very good amount of money per trade, not per trade, but overall, because you're doing a lot of the work automatically now instead of having to do it manually. So this is the big advantage of machine learning, is it allows you to automate things that only once a human could do, but were for strategies that weren't that profitable per trade. Like, so we watch Billions, and I love that show myself. And so if you look at that show, the guy puts like, $500 million on one bet, right? And if you have that kind of capital, you have access to that kind of information, yeah, it's great. Those are great strategies. But most people don't have, a huge network of proprietary information. And so the kind of strategies that are left available to more retail type of traders are ones which you make some money, but you're not gonna make a killing on it, right? And then the second of all, because you're not making a killing on it, you got to do a lot of them. And that's where the power of machine learning is. You can do a lot of them quickly and make money that way without having to spend, every living minute, staring at a computer screen. So this is kind of like what's made machine learning very, very popular is the power to be able to automate strategies that were more human based versus just pure technical indicators, and be able to do it in a time efficient way in terms of your own time. So any questions? If I'm going too fast, too slow, let me know. Okay, so what is machine learning? From the chat group, I could kind of see that a lot of people here have some sort of programming background. So I'll kind of explain what machine learning is in context to how you think about programming. So when you're doing programming, let's say with Python, you feed it in data and you have some sort of Python program, right? And it will spit out the results, right? So this is conventional programming. This is way like, the canonical examples like print hello world, right? So you put your print hello world and it has the result hello world, right? So very, very straightforward. What machine learning does is it basically turns it on its head, right? So instead of you putting in the program, you put in the results, you put in what's called training data, right? And then you put in training data, and then machine learning, an example of machine learning frameworks is like TensorFlow, will automatically spit out the program. So the way you can think about it is you put in hello world here and it spits out the program, print hello world, right? So it's just the opposite of what conventional programming is. But machine learning is more analogous to the way humans learn. So very few humans learn by some neurosurgeon opening your head up and moving your neurons around, right? Most people learn by, your teacher gives you an example, and then you learn from that example, then you're able to do it on your own. And that's how machine learning does it. Except, instead of getting just a few examples, it needs hundreds of thousands of examples before it actually learns. But that's what machine learning does, is that you put in the results, you put in, the data, and this kind of data we're talking about is like features. That's kind of the terminology that people use in machine learning, is some sort of features, right? So a feature would be things like what was the close price of the stock 15 minutes ago, or what was the CPI, Consumer Price Index, last week, or things like that. So things that have predictive information. And then what machine learning does is it builds a program. A lot of times a neural network or some sort of model that will essentially make a prediction. So it basically takes the data and then tries to produce the results. So it's much more similar to how humans learn than how traditional programming happens. And the real big value in all of this is that the way to think about forecasting is that each data source, so Twitter, Wall Street Bets, the close price of the stock, the fundamentals of a company, they all have predictive information. And what you're trying to do with machine learning is you're trying to mine the predictive information in each of these data sources to build a model that can hopefully predict what will happen next. And that's the power of machine learning. That's what you're essentially doing. You're basically kind of mining all of the predictive information in each of these data sources. And some of these data sources, the predictive information is additive, and sometimes they just overlap. So so that's kind of the data sources is really key to getting a really good model and having good results. So this is what machine learning is about. Any questions, just let me know. Okay, so let me move on. Um, so as I mentioned, I run a company called Pico Group. You guys are welcome to go to my website, pico.group. And what we do is we work with a lot of day traders, people who have strategies that work manually and they just want to automate it. And the reason why they want to automate is because while they do make money at it, it's not a lot of money and it takes a lot of time human wise. So they want to take what they're doing and scale it up. And so that's what we do. Um, this is pretty much done on a consulting basis. And then a lot of people want us to host their algorithms. So after we build it for them, we host it on the cloud, and then we have the whole interface wrapped around this. And then we have a bunch of safeguard measures. So like let's say there's a bug in the code, we have these. It's almost, you can think of it like a stop limit, things that basically like these fail safes that prevent the algorithm to go crazy, and so it prevents the loss in the portfolio. And then we also have a backtest mechanism, so you could backtest your strategy and make sure that it truly works. So the basic approach is you start with backtesting your algorithm, make sure it works on backtest. If it works in backtest, you go to paper trade. That means you're not trading real money, and then you do live trading. So that's kind of like the pipeline of how you take a strategy through its paces before you deploy it for real. And then we have a huge library of machine learning models. So this is what my company does. And why don't you just show you some of the results. First, I wanted to say that, Pico Group as well as Limo Wealth, this is just um, uh, uh, these are not forward-looking statements. This is basically, we're saying past performance does not reflect future results. This is kind of just standard disclosure. But let me just talk about some of the results that machine learning-based investors get. So I'm not sure if you guys have heard of a Sharpe ratio, but Sharpe ratio is a measure of how much return you get versus risk. So what you want to do is get a Sharpe ratio that's over 1. If you get 1, it's actually pretty good. But if you get over 1, that's phenomenal. And so the average Sharpe ratio for a machine learning based investor has been about 3.3. So that's way past what most people get. And if you look at the compound annual growth rate, it's about 42%. So it's really, really great returns. Now, your mileage will vary greatly depending on what you're doing, but this is just showing you some examples. So I'm going to dive into a demo where I'm going to show you a little bit about our platform. And then I'm also going to show you something called LumaBot, which is an open source platform that's been developed by LumaWealth that, if let's say you don't want to use a service like our own, which where it's hosted, you could do it yourself running on your own computer. So I'll show you 2 ways of doing it. So the tools we'll be using, one is Alpaca. So if you don't know about Alpaca, it's a really great service. It is, it probably has one of the easiest to use APIs, and also it offers free trading. So it's really good. And there's no account minimum. So it's a pretty good deal. We're using Python 3, which is the modern version of Python. Panda data frames. Panda data frames is kind of like the Excel of Panda. You basically are able to do all these really, pretty sophisticated data manipulations. And this is really important for when you're trying to clean up the data and get into good shape for the model. We're going to be using TA. TA is a technical analysis Python library. So this has, I don't know, maybe 100 different technical analysis functions in there. Scikit-learn, which is it's a very basic shallow learning machine learning library, but it's pretty much industry standard for doing, like, especially a lot of forecasting work. We're going to use Google Colab. So Colab is actually kind of neat. It's one of the best deals on the web. It's totally free. So you get free compute power on the web. The only downside is that it times out after like 15 minutes or so, if you're not moving the mouse around. So you can't run long jobs on it, but you could do a lot of interactive programming on it. We're going to do work on Google Cloud platforms and also use Google natural language processing. So Google has a really strong machine learning system. And so it's really great to get up to speed quickly versus having to, download a gazillion GitHubs and try to figure out why they're not working. So this is what the demo will consist of. So let me show you the setup. Maybe what I'll do is I'm going to first show you. So this is the Pico Group website. So if you guys want to learn more, you could go here, just pico.group. Let me show you our app. And then I want to kick it off because it takes a little bit of time to run. So this is our application. And so what I'm going to do is I'm going to show you how we submit jobs in it. And I'm going to kick it off because it takes a bit to run. So we support Alpaca plus interactive brokers. We're just going to do a back test here. And then we're not going to do bid-ask spreads because it takes too long to run. And then let's just pick, I'm going to pick 3, 10, and let's start at the open of the market, which is 9:30 a.m. Okay. And then, oops, 9:30 a.m. And then 3:10. Oh, let's I can't do 3:10. Let's do 3:15. And let's do 4 p.m. Okay, good. And we'll start with 10,000 paper cash. And then we're going to use a simple trading strategy. A simple. I'll explain what that is later. And let's have it when it varies like more than 0.3. Yeah, that's good enough. Yeah, something like that. Let me pick a stock. Let's just pick the first one. No. So I don't want necessarily max out the positions, and we'll sell everything at the end. Okay, we're just going to use the random forest rolling. We have a bunch of, as you can see, we have a bunch of models. This is not all of them, but you get the point that there's quite a few. We're going to forecast 15 minutes in the future, and we're going to trade every 15 minutes. So let me let this run, and then I'll get back to it later. Okay, so it's kicked off. I'll get back to this later. I just want to kick it off before I talk about what we're running. So so that's how you kick off a job in our system on Pico Group. And then again, as I said earlier, we'll show how to do this in Lumabot, which is an open source way of doing this. So so what we're going to do is I'm going to show you the setup of how to interface to Alpaca, how to use something called Beautiful Soup to scrape FinViz. FinViz is also another great website containing a lot of investment information on stocks. We're going to prepare the training data and the test data, then train the model, generate the prediction, and then analyze the results to see how it did. So let me show you the code. This is Google Colab. So to reach Google Colab, we just go to collab.research.google.com. So it's pretty easy. Here you can see the different dependencies we're installing. So basically you do install TA, pip install and TA. What that does is just basically, because Collab after it's inactive, it kind of wipes itself out. So you have to reinstall the stuff every time. So this installs the Python libraries for TA, Alpaca Trade, and then Google Cloud Secret Manager. And then these are some of the libraries I talked about. So like the Pandas, Panda Data Frame Library, and then the Alpaca library, and then the TA library. So TA is the technical analysis library. We have this little thing down here to actually, I realize this might be kind of small. Let me make it bigger. So I'm not sure if you guys can actually see this. Let me try and make this bigger for you guys. This is probably better, so you guys could see it better. Yeah. Okay. So I forgot to say this last part is how you authenticate. You run it, and then you have to basically authenticate to your Google Cloud. In general, I don't like to keep secrets inside of code. It's a security hazard, especially for securities when you have money in your account. So what we're doing here is we're basically using Google Secret Manager to retrieve the credentials to the Alpaca account. So that's what we're doing here. And then what we're doing here is setting it up for using some of the Google Cloud natural language processing. So what natural language processing is it allows you to take just about any human language and make it understandable by a machine. So that's actually really important because a lot of the data sources you need for your forecast are actually in human form, right? And that's not surprising, right? Because it's humans largely who are trading or controlling the bots that are trading on the stock market. So that's what this is doing, is setting up all the dependencies. And then these are some of the credentials needed to get things set up. And then this is how to authenticate for the natural language processing. And I have a little function here that basically will take in content and then give a sentiment. So yeah, so this is how you use it. So it's pretty simple to use, right? You just say, the type we're putting into it is plain text, and then what it does is passes in the content to the Google Cloud service, and then it analyzes the sentiment and then returns the sentiment. So it's pretty straightforward. And down here, you can see that we're going to scrape the web. So we're going to use FinViz. Let me show you guys what FinViz looks like so you guys can get some idea. So this is FinViz. Actually, I just realized it's super tiny, so let me make it bigger for you guys. So you can see it has like lots of great information on here. But what you see also here is the headline, right? Yeah, we definitely had a sell-off today. I know that for sure. So anyways, so there's all these articles, and some of the articles are positive, some of them are negative, right? So anyways, this is what we're going to scrape. So we're going to scrape the articles. Since we are trading, let's say A, which is Agilent, we're going to scrape all the tickers, all the articles that are revolving around Agilent or A. So basically, this is scraping FinViz to get the articles, and then basically it is scraping it through using Beautiful Soup. There's many ways to do it, but this is how this was done. And then kind of getting to the right kind of format for ourselves, and then we're doing the sentiment analysis. So here's an example of how this works. So this is scraping things like Booking Holdings, right? This article, Booking Holdings or Agilent, top earnings surprise. And so you could see that like things that are kind of neutral, it's just 0. Things that are somewhat negative are like minus 0.1. Things that are positive, right? It's like a 0.5. So it basically will return a sentiment score. So you can use this as a data source for your model to predict how well your model is performing. And then yeah, so here it is again, just getting some of the formatting cleaned up. These are just some helper functions. This one here is particularly useful because in the past, Alpaca was very generous in their quote data, but they've made it much harder. So you have to actually do retries and other kind of rigmarole to get a lot of data from Alpaca now. So that's what that function does. So I'm going to show you how we're setting up the training data now. So with we're going to use natural language processing. So we use those helper functions to get like the stock data, and then we basically set up some features for the model. So time of day, Munich time, etc. And then what we're doing here is we're basically calling the TA library, right? So all these different type of technical analysis indicators, right? And there's actually a lot more than this. And then we join all this technical analysis to our training data. And then you can kind of see what this looks like, right? So we have this example of one of the indicators that we calculated. And then we do the same thing, but we do it for the test data so that we can test out to see how good the model is. So then you can kind of see what the resultant time data frame looks like. So let me see if I can make this bigger. So you can see all the different features we generated, like time of day, Unix time, volume, delta, RSI, sentiment. So there's a ton of different technical indicators that we generated. Okay, so once we have the data frames set up for the test data and the training data, we're now going to do this. We're now going to do the training. And so what we're doing here is we're doing training using a method called like a rolling training method. So what we're doing is we are essentially, let me close this window here. So what we're doing here is we're trying to keep the forecast distance the same. So we're basically sliding the window over and training the model. So in this case, we're using random forest to do the training. And this is the training command, which is basically fit. And we are just doing it 15 minutes in the future, kind of like as I showed you in the application that in the other window that I showed you earlier. And we're walking through every 15 minutes retraining and then making a prediction, right? And so that's what this for loop is doing here. And then once we've done that, we make a prediction, and then you can see the prediction that it generates here. So now let's see. So this to give you some context, right? You can kind of see how this looks. So you can see the predicted value. And then you can compare. Actually, I have a little chart here, but anyways, you can see that this is what came out of the prediction, and then I have a graphed out here, so you can see the actual close price was blue, and then the predicted is the orange line. So it's not perfect, but it's pretty close. Now these straight lines are when the market is closed, and the market is closed a lot, right? The stock market. So that's when the market is closed. So that's what the straight lines are. So those are the ones that you could pretty much ignore. Okay, and then let's see what kind of features are important. In this case, the most important feature in making the prediction was something called RSI, relative strength indicator, what I talked about earlier. But then you can see the second most important was volume. Now these features are so this is one thing that's really nice about oh yeah, thank you, Henry, for making the comment about random forest. Random forest is a decision tree. Yeah, so that's the nice thing about decision trees or random forest, that it tells you feature importance. So now let's evaluate how the model did. So let's calculate something called mean squared error, and also percent error. So you can see what the mean squared error is 0.68, and the percent error is 0.25. So not bad in terms of the results. Let's do the same thing now without the NLP indicator. So it's the same thing as you saw before, except I don't have the NLP indicated in here. Okay, and then you can see the resultant graph is somewhat similar, so kind of hard to tell the difference. So what we're going to do is we're going to calculate the p-value, right? And basically, what you'll see is that this has a really small p-value, and that basically, if you think about it in terms of statistics, it means it's actually significant to have the p-value, to have the NLP as a feature into the model. And that makes sense, right? Because obviously, if the stock's good news, the stock was going to go up, and if the stock has bad news, it's going to go down. So that's a quick demo about how this is used. Yeah, I see Henry made a good comment. The extremeness of the observation. I'm not sure quite what was meant by that, but anyways, thank you for your comment, Henry. So the way the stock trading trigger code works, and I'm just kind of blowing this up so you guys could kind of see this, is if the close price is lower than the predicted price, then obviously you want to buy, right? So barring that, it has to be above a certain threshold, right? Like maybe in the case I used in the application, I used like 0.35. So that's what you would use. So if it's greater than 0.35%, then it means that it's probably a good time to buy, and if it's less, then you probably want to sell. And if it's kind of in between both of them, then you don't do anything. You just hold it. Okay, so this is probably the most simple stock trading trigger you could have. We actually have a lot more sophisticated ones. A lot of people use things like reinforcement learning to um, to uh, um, uh, to have as a trigger, but this is just one to make it very simple. Okay, so I kind of showed off the capabilities of what you could do with machine learning. In the course, we're going to go over a lot more detail including the machine learning basics. We're going to go over deep learning. We're going to go over how to build a stock forecasting model. That's kind of like the project. The forecasting demo just kind of give you a small snippet of this. And so you guys saw basically a training demo with a forecast. Oh yeah, let me show you the results of the forecast. Let me make sure it finished. Okay, it looks like it finished. So let me show you guys what this looks like. Okay, so we're training Agilent. We used random forest rolling. We used just a simple trigger, and so we start with $10,000, and we ended up with a few bucks more, right? It's about $36 more. So this represents a 28% CAGR, and or compounded annual growth rate, which is pretty good. A Sharpe ratio of 3.87, so that's excellent Sharpe ratio. Anything over 1 is good. So 4 is like, or something near 4 is excellent. And then while there were some losses, the wins were more, and this is why you made money. So this is just an example of if you use it in our system, how it would look. Let me show you guys also now a second demo, and this is with oh shoot, it got disconnected. Let me try to reconnect it. Yes, Henry was clarifying. He says, I was referring to the p-value being a measure of extremeness of an observation compared to another measurement like hypothesis. And that's a good point, Henry. Thank you so much. Okay, this is an example of using LumaBot. So LumaBot is a open source project on GitHub. I encourage you guys to use it. And we have in here it using the forecast model. So there are several files in here. I had this running before, but one thing about Cloud Shell, which is actually technically free, is that it's also kind of like Collab. If you don't use it, it times out and then resets itself. So I ran it earlier, but I'll start running it again. So this is running in the cloud, and one advantage of running in the cloud is that it you don't have to worry about connectivity speed. You don't have to worry about someone tripping over the cord and your power going out, or your internet going out, or anything like that, or slow connections. And there's several key files in here. So one of them is this main file, which kind of connects everything together. There's ML strategy, where you would put your machine learning model forecast there, and then this is where the credentials are in this file, and then this is the Python script that downloads all the Apache data. So that's kind of like that at the high level what's going on, and then here you can see some of the logs. Let me just pull some of this up. So there's a couple of CSV files. I'll show you what that looks like. These are outputs of the run. So what you see here is it has the date time, the asset value, potential expected price change percentage, last price, portfolio, prediction, shares owned, squared error, unspent money, and he'll give you stats on this. And then also here it has another CSV file that tells you what all the trades that it did. And then there's a graph here. You can kind of see how the strategy did and what it looked like. And then it also spits out a web page, which I have to download here to show you. Okay, so I'll pull up this web page. Okay, so you can see when it sell, when it do the buys, right? And these straight lines just means it's closed at that time. Okay, so this is still running, but yeah, this actually takes a long time to run. So I'll get back to it later. But basically, you could see what the output looks like from these files. Let me show you kind of a little bit more of the code here. So ML strategy is kind of like the main area you would keep your. Oh, how come I can't open it? Oh, let's see. Sorry, it's right here. Let me make it bigger. It's too small. Okay, so so this is going to be kind of familiar. This is just initializing things. You could see the code that we use to initialize this class, and then basically it's the same similar code that I showed you before in the Collab. So this is kind of like the productization of it, and then this essentially makes the prediction, and then use that to figure out, if the prediction is higher than the threshold, whether you should trade or not. So it's the same exact code as well, not the same exact code, but it's the same basic idea as what I showed you before. If the prediction is higher, buy. If the prediction is lower, sell. If it's in between, just hold it, right? So that's where it is. The main Python file is just how you get everything set up, like the log files and what's the actual assets you want to be trading, selecting the strategy. Yeah, so it just kind of puts it together, but doesn't. Most of the really main work is in the ML strategy. Okay, so now you guys have seen two ways of using machine learning. One way is like through a service like our own, where we're hosting it for you. And the other way is using like LumaBot and then integrating the machine learning into the LumaBot source code. Okay, so let me move on. Okay, yeah, so I just went over the LumaBot demo. So I showed you LumaBot training demo with the forecast. It's the same forecast engine that we used before in Collab and what's running on our application right now. I showed you it kind of with Google Cloud, Cloud Shell with VS Code IDE. And then what we're going to be doing in class is we're going to essentially build this, right? I said you guys can build one that's for your specific security and it's going to be higher performing. But I just showed you an example right here of how to do it inside LumaBot. Okay, so let me talk about the course. Okay, so if you guys haven't already, go to lumawealth.com and you can see our courses. So these are the upcoming live courses. So let me go over the course curriculum. So what we're going to do is, the first class is for students to introduce themselves. We go over kind of like what the logistics are of the course. People sometimes form study groups together. And then the second week, we get into the machine learning basics. So what is and why machine learning? We talk about some of the most basic models out there, like linear regression and random forest, what the training process looks like. And then the week after, we get into deep learning. So deep learning is super hot right now. It's how you do advanced things like computer vision or natural language processing. But it's also now increasingly used with time series or processing data so that it can become time series, like natural language processing data. And then we'll get into how to optimize the model. So we use a technology out there called AutoML, which allows you to do machine learning without a lot of work. Okay. So the first project is we're going to um, uh, understand more about what time series is, because the world's kind of divided up to non-time series and time series. And time series is actually a bit harder, but we're going to kind of explain what the difference is, and then and why it matters, and then we're going to build a stock forecasting model, kind of using this example I showed you earlier. And then when we get to natural language processing, and this one's huge because this opens up so many doors to data sources that previously were really hard to tap into a model. And then the capstone project, the ending project, is basically how to do stock forecasting, right? For real. And this is being hooked up to news feeds and doing some things like sentiment analysis and things like that. Okay. So that's what the course is about. So the upcoming live course is on October 14th. There's another one on December 30th. So I want to encourage you guys to look at that. They go really quickly. Robert likes to keep the class somewhat small so that there's more personalized training or help, right? And then the other thing is we do office hours. So as part of the course, we have like a half hour or so office hours per week for each student. So we talked a little bit about the project already. This is a little bit more about me, so if you need to know. And then there's a ton of testimonials because people are really happy with what they learned in these courses. Okay, so let me move on. Okay, great. So wanted to just stop here and just see if people had questions. Okay, Juan just asked, are the features ranking you showed earlier based on which one had the most impact on accuracy? Yeah, it is. Yeah, so let me go back to that graph. Yeah, so you can see, which one had the highest performance. Not to say the other ones were no value, but they weren't as additive to prediction as RSI was. Henrik asked, can you use terminal on Mac for programming? Yes, you can. You can certainly do that. But what I like to do is actually like to use Collab to do this. So you can, Collab is basically interactive Python. And so you could type one low command, see if it works. And then if it doesn't work, we try that one line instead of running everything over again. So it allows you to interactively program with Python. So it's actually quite nice. And any browser could do this. Okay, great questions, Hendrik and Juan. Okay, any other questions? Okay, we'll give people a few minutes to ask questions before we end this. One thing I'd like to say is one of the big benefits of this class, and I've taught this a few times now, is kind of the collaboration you get. So a lot of students have kind of worked together on their homeworks or work together afterwards. And so I think while you learn a lot from the course, I think you also learn a lot from each other and also perhaps meet other partners. So I think that's a big benefit. And so it's also why I encourage you guys to get on the Discord, whether you actually take this course or not. And then does the API material include the login credentials? So what we require for the course is you just sign up for Alpaca credentials, which is basically a free account. And then you can sign up for Google Collab, which is also a free account. So that's how you do it. That's how you log in. Good question, Henry. Okay. Any other questions? Oh, someone asked, what if you missed one session? So all the sessions are recorded. So if you miss one session, then you can watch the recording. And also we have office hours where if something is not clear, I can help give you one-on-one tutorials needed. But the point of what our course is trying to do is have you guys develop a bot, a forecasting bot that basically will be able to help you do trades, like live trades, by the time you finish this course. Great question, guys. Do the APIs uninstall themselves after the program completes? Oh, good question. Okay, so I think okay, so I think I understand Henry's question better now. So all these kind of libraries you see being installed here, they're all free libraries, so there's no charge. You could download them right now. These are just some of the more popular ones, and after Collab times out, you have to reinstall the stuff. So it's really great for interactive Python, but they're not good for like long-term running. If you want to do them long-term running, then you got to use like a VM on Google Cloud as an example, or use your own machine. Although I think doing stuff in the cloud is better because it's more reliable. Yeah, the reason why these libraries disappear is because Google wants to get you to buy their upgrade, right? And so they don't want you to get free compute. Yeah, so you don't use Google Colab for real trades. You only use it for maybe backtest. Good point, Henry. Okay, guys, any other questions? We're just about out of time, but I want to just give you guys a minute to see if there's any other questions before we end the session here. Okay, guys. Well, thank you so much for attending. Really appreciate the interactiveness. Hope to see you guys on in the course. But in the minimum, you guys should look at the YouTube channel. You guys should join in the Discord. I think you guys will learn a lot. And it's actually right now there's a bit of a dip in some of the markets, so it's actually probably a good time to get in. So, anyways, thank you guys. Really appreciate everyone's time today. And this live stream will be posted onto YouTube. So if in case there's parts you miss or some parts you didn't understand, you can refer back to that.
Thanks so much, Greg. Appreciate it.
Of course. Oh, Robert, is there any last words you want to say before we terminate?
I just want to say thank you very much for your presentation. It's great. I always love hearing this stuff from you. This is definitely a great introduction here. And there was one thing I wanted to mention. I'm trying to remember what that was now. Oh, someone asked about what if you miss a class and whatever. Just one thing I wanted to point out is that, things happen, right? People get sick or whatever, right? If you ever want to retake the class, you could redo that. And there's people have done that. So just want to make sure that we covered that as well.
That's a good point. I forgot about that.
Yeah. Cool. Awesome. Great. Thanks so much, Greg.
Okay. Thank